Hi, I'm Cindy Cosgrove. I'm the Chief Assessor for the town of Auburn, and I'm here today. We're going to talk about some of the tax relief programs that are available in town, including real estate tax exemptions and our deferral programs. Basically, the types of programs that we have are exemptions, which are decreases in the taxes that you owe annually, and you have to apply for these once a year. The other program is a deferral program, which allows you to temporarily defer the payment of taxes until demise or sale of the property. All these programs are controlled by the state, and we have some local acceptances that are done on the town's part. First, we'll talk about the exemption programs. All of our exemption programs have specific qualifications that must be met. Exemption qualifications are established by Mass General Law and only administered on the local level. These qualifications can include financial and residency requirements, along with documentation of conditions such as blindness or war-related disabilities. The first of the exemptions is the 41C exemption for seniors over 68. This is the first year that we've been able to allow this to seniors over 68. Prior to that, they had to be over 70. This exemption requires that an applicant meets both income and asset limitations. They must be 68 by July 1st of the fiscal year they are applying for. So to apply for the current fiscal year, which is fiscal year 2011, you would have had to have been 68 years old by July 1st of 2010. The first year you apply, you are required to give a copy of your birth certificate for proof. An applicant must have been domiciled in Massachusetts for 10 years, and you have to have owned and occupied the property since July 1st of 2010. The base exemption amount is $500. The limits for this exemption: for married, your assets for fiscal year 2011 must have been $39,876. This includes your checking accounts, savings accounts, any certificates of deposit, IRAs, 401ks, money market certificates, annuities, stocks, bonds, and if you own any boats. It also includes any real estate over 3 units and second homes or vacant land. For fiscal year 2012, there will be a COLA applied to this, and the asset limitation for 2012 will be $40,534. I'm including the fiscal year 2012 numbers here, but you still do have until March 31st to apply for this exemption, so there still is time to apply during this current year. For single people, the asset limit for fiscal year 2011 was $37,219, and for fiscal year 2012 it will be $37,833. Inclusions are the same as above, and you are required to give us documentation showing the balance of these as of July 1st, 2010, or for next year, July 1st, 2011. The income limitations for the 41C: if you're married for fiscal year 2011, you had to have made $25,000 or less. There is an allowed deduction for Social Security for married couples of $6,237. So if you're collecting Social Security, you would be able to make actually up to $31,237 and then make the deduction. For single, for fiscal year 2011, the limit was $20,000. Your allowed Social Security deduction for single people is $4,158, so you could actually have, including Social Security, up to $24,158. You must give us documentation for your income sources. That would include any W-2s, 1099s, or 1099-R forms. The next exemption we're going to talk about is a 17D. This is another exemption which is for seniors over 70, but it also would include surviving spouses, widows, and widowers of any age. It includes minor children with a deceased parent that are owners in the home as well. The base amount for this exemption is $175 a year. For next year, there will be a COLA applied to this, so then the exemption will go up to $178. To qualify for the 17D, you must have owned and occupied the property as your residence for 5 years. You have to meet whole estate qualifications, but there are no earned income limitations for this exemption. So for fiscal year 2011, you would have had to have had less than $53,169 in assets. The limit for next year will be $54,046 in assets. This will include any checking accounts, savings accounts, certificates of deposit, IRAs, 401ks, money market certificates, annuities, stocks, bonds, and if you own any boats. It also includes any real estate that you own over 3 units and second homes or vacant land that you own. You are required once again to show us documentation with the balance of any of the above as of July 1st of 2010, as well as a birth certificate or death certificate verifying that you qualify as either a surviving spouse or a senior over 70. The next exemption we're going to talk about is an exemption for the blind, which is under Chapter 5, Section 5, Clause 37. This exemption is for $500. In order to qualify for this exemption, it requires an annual certificate of eligibility from the Commission for the Blind. You have to be a legal resident of the Commonwealth, and you have to occupy this property as your domicile as of July 1st of the fiscal year. The property can be owned jointly or in common with other people. The final clause that we're going to talk about is for disabled veterans. You must have a certification of veterans eligibility from the Veterans Administration to qualify. The amount of the exemption that you would get is going to vary by the percentage of disability that's certified, or also your ability to work and qualifications for special housing. The town of Auburn doubles the exemptions that you qualify for. It's voted annually at town meeting, and for the current fiscal year, we are doubling up to 100%. The first year of the exemption, it's for the statutory amount. So if you qualify this year for a $500 exemption, you would get $500. In succeeding years, what would happen is, as the tax increases, your exemption would increase along with it to cover that increase until it reaches an additional 100% of the face value of the exemption. The next programs that we're going to talk about are hardship deferrals and senior deferrals. There are 2 programs. For seniors, there's a Clause 41A, and to qualify for that, you must be 65 years of age, you have to meet certain earnings limitations, and you have to provide an affidavit. The deferral will allow you to defer up to 50% of the assessed value of the property and taxes. The amount of the deferral can be all of the taxes or just a portion, and your interest would accrue on whatever you defer at a rate of 5% per year. If you qualify for any of the other exemptions, such as a senior or a blind exemption or a veterans exemption, you can process those prior to doing the deferral. The next deferral is a temporary hardship deferral. There are no age requirements for that and no income requirements. You can apply based on any type of a hardship, including active military service, illness, or disability. With this program, you can defer the taxes for your property up to 3 years, and then you would have an additional 2-year grace period where you would not have to pay anything back on the deferred amount. Once you've reached the end of the 5-year period, you would have repayment in installments for up to 5 years, and your interest on this would accrue at 8% per year. The hardship deferral requires that you own the property as of July 1st of the fiscal year you are applying for. And either of these deferral programs will constitute a lien on the property. All persons of interest must sign off on any deferrals, and that would include if you have a mortgage on the property, the mortgagee would have to sign off, along with any joint owners. If your property is in a trust, the trust would need to sign off. Or if you have a life estate, the remainder man on that life estate would need to sign off. The final program that we have available is a hardship exemption. This is a permanent reduction of taxes for a fiscal year due to a hardship. The amount is determined by the Board of Assessors based on facts presented by the applicant. You have to give complete documentation of income, your assets, and any expenses contributing to the hardship. It can serve as a short-term solution until another resolution or another program to give you assistance can be found. There are also some programs out there that are not administered by the Board of Assessors. One of those is the circuit breaker tax. This is an exemption that is available through the Mass Department of Revenue. It does require that you file an income tax on an annual basis. You do not have to have any taxable income to get the credit. So even if you don't need to file your income tax, if you file for this and you meet the criteria for it, you would receive a refund check from the Department of Revenue. The other program that's available that isn't through the assessors would be the Senior Tax Workoff. You can get applications for this through the Senior Center. There are exemptions of up to $1,000 of taxes per year allowed with this program, and you need to be at least 60 years of age and the assessed owner of the property. There are certain income limitations that you would have to go through to qualify for this. Basically, these are the programs that are available, and we'd like to encourage people, if you have any questions about any of these programs, you can contact us at the number on the screen, or 508-832-7708. And if you need assistance or you need to set up a payment plan, we encourage people to contact the tax collector's office at 508-832-7705, and hopefully we can find some way to assist you.